Welcome viewers, you're watching the Mortgage Busters show and we're all about helping you pay down your mortgage right down to zero. We bring in the professionals and we talk about all the different strategies and methods you can employ to pay that mortgage down to zero so you can get the title of your property into your hands, into your safekeeping and not the bank's. But you know what, Adrian?
What?
You know, this show's become a lot more than that. And really, we've become all about paying down your mortgage, but also preparing for retirement. Just people are in real need of good advice around retirement needs and retirement solutions.
Well,
isn't that right?
nobody goes looking for it.
Well, that's it.
They're scared.
That's it.
They're scared.
Scared? Because the real situation in life is such that you need about $1 million
To retire.
in investment assets, super, property, shares, whatever, to retire on.
That's a minimum.
On what? What does $1 million get you?
I think it's $1,000.
$1,000 a week.
Between two people.
Most people we see, and we see a lot of people, have about $80,000, $100,000, $150,000 in super, and they've got about 10 years to go. So check out our website. If you'd like for one of us to come and see you and talk about your finances and your financial future, go to our website, fill in the appropriate form, and we'll get you your financial thumbprint done.
Yep.
Which is a fantastic document, all at no charge, and that sort of puts all your numbers in one place and it gives you some options in terms of what you can do to get yourself to where you want to be, especially in retirement. But more importantly, we've got a guest today.
Yes, we do.
And it's Stuart McGilvray from Phalanx Financial Services.
Thanks for having me, guys.
Welcome, Stuart.
Thanks very much.
That's a
I'm happy to be
mouthful.
here.
Phalanx?
Yeah,
Financial.
Phalanx Financial Services.
Can you give us an idea of where that name came from?
Yeah, so I did come up with the term. I'd seen it used in a few American companies where what they're trying to do is actually work together with like-minded people. So a big part of what I do is actually set a plan with people and work with them from day one all the way through to where they want to get to, rather than just a wham bam, thank you ma'am, and see you later. So it is a planning approach, and that's all about what the company is. So
Fantastic, wonderful. So you work in insurance and superannuation?
Yeah, they're two of my specialties, I suppose. I'm pretty passionate about both, and yeah, they play a big part in what you were just talking about with retirement planning and making sure people do have enough to retire with when they get to the age they want to retire. So
Absolutely, absolutely.
But you're a financial planner.
yeah, financial
That's
planner,
the
certified
heading.
financial planner. And,
You got all the qualifications?
got all the
and
qualifications, yep. so-
certifications and everything?
Yep, absolutely.
Look, as I mentioned earlier, Stuart, you know, we see a lot of people in their homes, and one of the questions we ask in terms of producing this financial thumbprint report is, you know, that they've got their insurances covered and,
Yep.
you know, what they have and what they don't have. And, you know, most people don't really know. They know they've got something, yeah, we've got some life insurance. I think it's connected with the super, and I think we've got some, you know, trauma and permanent disability insurance. I think that's with the company, but no one's, you know, not many people are sure. I don't think I've come across anyone that said to me, yeah, if I die, we get so much, and, you know, this is how much I pay, and so on and so on.
Yeah, I think it's the sort of thing, I mean, it's a morbid thing to think about, obviously, that something's going to happen to you or your family, so maybe it's put aside because you just hope it'll never happen. Unfortunately, the sad reality is that it does happen, and it is the sort of thing you have to really look into, because just like you service anything else, like you service your car, you look over everything else in your life, you need to look over your insurances and make sure your family's looked after. So
It's weird, isn't it? You buy a new car and you would never think about driving it off that lot.
Well, they won't let you if you.
Yeah, they won't let you.
yeah, well, that's right. I think the stats are something crazy. Like, I think it's maybe 95% of people insure their car, yet only around about 5% have properly looked after their insurances.
So the question is, if the average Joe is working hard, bringing in a living, and his family's being supported, if, God forbid, something happened to him and he passes on,
Yep.
what does the family do? It's too late then to think
It's too
about.
late then, and that's why the sooner you look at it, the better, because you don't want to be in a situation where you're approaching insurers where you've already had something happen. So ideally, you're going to see them when you've got a clean bill of health and getting yourself properly underwritten, and when something does happen, hopefully it doesn't, but if it does, you know you've got that peace of mind that your family's looked after. So
Okay, so there's life insurance, which we've just talked about.
Yep.
Income protection.
Yep, income protection. There's four main ones. You've got life, TPD, which is total and permanent disablement, income protection, and trauma cover. So
you should really have those three all together, or?
yeah, so at the very least, you'd want to have those 4 reviewed, whether you need them all or it can vary from person to person, but those are the 4 main personal insurances that you need to worry yourself about, and they can be structured inside and outside of super, so that plays a part as well. So
Right.
Oh, inside and outside.
except for trauma. Trauma's always outside. But
So what's the average Joe who's got a family? What's his most important asset? What from your eyes?
yeah, in my opinion,
insurance, yeah.
So it's, if you ask them, it'll probably be their home or their car or their caravan, but for me, it's their ability to earn income. So if you're a breadwinner that's bringing in a wage for your family to help bring up the kids, to help look after your family, you need to continue that income flowing through, irrespective of what happens with, I guess, injuries and accidents that can occur. So
You're right, because if the job goes,
What's the
pretty
point?
much.
What's the
everything
point of
else-
having anything else?
Exactly.
Yeah.
Everything seems to go. It's a bit of a house of cards, isn't
Yeah,
it?
well, some pretty scary statistics on your average 30-year-old earning maybe 60 to 70 grand a year. If they go down and can't work again, you're looking at near on $3 million that they're not able to provide for their family because their family's expecting them to work for the next 30 to 35 years.
Yeah, right.
Compare that to the damage a dint in a car. You might be out of pocket 5 or 10 grand for your car if it's done some damage, but obviously it's pretty clear cut which one's more important to me.
So what should these insurances cost?
It varies. Different occupations have different costs. Obviously, someone that jumps out of planes on the weekend might have to pay more than someone that's in a fairly conservative office job. But that's why you need to actually review it with a professional, because different companies are more suited to different professions, different age groups, and et cetera, et cetera. It's sort of very similar to a lot of things. You need to sort of make sure that you've gone through that process and had it reviewed properly, so you know you're getting the best value for your money. So.
Are all these insurances tax deductible? Like everyone we've talked about, life, income and TPD, the trauma and permanent disability?
Yeah, so trauma's not. Trauma's the most expensive, but it's also the most claimed on. The other
Is it really? Is it the most claimed on?
Because if you think about it, trauma's a tax-free lump sum payment paid to the person if they have things like heart attack, cancer, stroke, but there's usually around about 40 odd conditions on there. So it can be other things, that obscure things like rheumatoid arthritis or a coma. Depends on the policy, obviously, but that's why.
So what if they lose their arm in a factory or something, if they're working and that comes
quite possibly. Yeah, so we'd have to, depending on the policy again, but that's the sort of thing you'd want a trauma policy to cover you for. And obviously if they can't work anymore, then income protection is going to kick in as well. So
right.
Back to the tax deductible side of things, the life, TPD, inside super are tax deductible, and the IP's tax or income protection's tax deductible inside or outside.
Okay.
And you're best actually reviewing it, because whether it's better at your marginal tax rates or inside super, which is a 15% tax rate, will depend on your job and how much you're earning. So,
okay. All right, we've got to go to a break.
Absolutely.
But when we come back, you know what? I'd love to hear some stories. Any stories that you've got for us?
Yeah, fantastic.
Yeah, fantastic. Stick around. You're watching the Mortgage Busters show. We'll be back with Stuart and Adrian and myself after these messages. Welcome back. You're watching the Mortgage Busters show, and we are with Stuart McGilvray from Phalanx Financial Services, and we're talking about personal insurances. Stuart.
Absolutely, yeah. So 4 main ones that everyone needs to concern themselves with. You've got your life cover. So that's a payment paid to the person you specify on the policy. Usually it'll be the spouse, surviving spouse. TPD, which stands for total and permanent disablement. Again, that's a lump sum paid if you're unable to return to the workforce ever. The third one's income protection. So people need to be aware what it is. It's a payment that gets made to you for around about 75% of the wage you were earning. That's the most you can insure yourself for.
Right.
And that continues as long as your benefit period runs for. So typically you'd want to have a longer benefit period, the longer the better. And it will cease if you can return to work or until your benefit period runs out. And the fourth one's trauma. Trauma's a lump sum, it's a tax-free lump sum paid to you if you suffer a cancer, heart attack, stroke, or a number of other conditions that might be on your policy. So those are the 4 main ones, and how much you need varies from person to person and family situation, but they're all important and need to be reviewed.
I'm pretty sure you said that people need to be concerned about those types of insurance. I think that's the word you used, but I really say they should jump on it and find out exactly where they sit with these insurances, because things can happen at any time.
Yeah, absolutely.
That's the thing,
it's,
really.
it's one of those things I think most people, well certainly a lot of people out there, are Superman until something goes wrong.
Yeah,
and
exactly.
I think that's why
You got
It's
me
the sort of
worried. I'm
thing-
going to check mine straight away as soon as
Yeah,
we
well,
finish the show.
it is one of those things. It's not the first thing you want to think about, and in day-to-day life, people are busy enough these days as it is. When are you going to get time to actually look into some of these things? Really, like you spend your Monday to Friday most of the time working, and then on the weekend, I'm doubting most people want to go home and review their income protection. So,
but you make it
you
easy
can do
for clients.
yeah,
You go and see them in their homes and stuff.
that's what I do. So that's a big part of planning for your future. And regardless of what might happen from a health perspective, what you want insurance to do is actually keep you on that same track. So if you're planning on getting to a nest egg of X, you want insurance to protect you financially, whatever life might throw at you, whatever tragedy might occur. So
Just a clarification on the income and the trauma.
Yep.
Because they almost sound the same. We're
Okay.
starting to get the hang of it now. You're talking
no.
more about it.
Yeah. So big difference is income protection. What it's designed to do is replace your income. So 75% of your income at the time you're unable to continue working.
But okay.
Okay.
So how are you not able to work?
Okay, so
What's happened? You've been
irrespective of
fired?
so unemployment's not included. What we're
Okay.
talking about is accident or illness, and it doesn't need to be at the workplace. You could get hit by a car on the way to work, touch wood, but it's the sort of thing that will cover you. You have a waiting period, so you have to wait a period of time before it starts. So what we usually do is we'll complement existing sick and annual leave entitlements people have. You wait your period of time, then the income protection starts, and it will continue as long as the benefit period continues to run, or you're able to return to work again. So that's the main thing. It's,
Trauma, you're not.
yeah. So trauma is a tax-free lump sum paid to you as a one-off, should you suffer any of the conditions listed on the policy. It's a tax-free lump sum. If you've got $100,000 of trauma cover, 14 days after the event occurs, subject to meeting the criteria of that particular condition, you'll be receiving that amount in your bank account. So
What happens if you actually have cancer, which does happen, and it goes into remission, and you've been paid?
yeah, so
What
not a
happens?
problem. I mean, that's part of what it's all about. So if you have any of those trauma conditions, it'll get paid to your account. You can certainly make a full recovery, return to work.
You've got to get the cancer back.
Yeah, you don't want to wish these things upon
Get
yourself,
another
but
policy.
but you certainly are covered and you'll be paid. As long as you meet the conditions on the policy, you'll be paid.
Be paid.
There's nothing to stop you from returning to work and living a healthy life from that
So they
point
don't
forward.
run after you and get all the bounces.
Absolutely not. No.
Get all the money back.
Yeah. So
So, Stuart, do you got any real life stories about, people
yeah, I've got a
that-
few. I've got good ones
Yeah.
and bad ones, but I see.
What about a couple of each?
Okay.
One of each, whatever.
Yeah. Okay. So I'll start with bad to start with.
Okay.
I felt quite bad about this one because I was following up a couple and they were procrastinators. They didn't want to subscribe to the process. I think it was probably disinteresting to them, to be honest, because who wants to look at all these things if they cost money and there's not a hell of a lot you get out of it until something goes wrong. So
Yeah, true.
follow-up emails, follow-up calls. We finally got to the stage where we were actually doing it, and the husband went down with cancer. So tragic situation. And instead of putting a really comprehensive policy together, we're sort of scrounging about trying to find any other insurances now that they may have had.
Right.
And they're not going to get nowhere near sort of the
What they could have done.
what they could have done. And
Gee.
a young family as well, so 2 young kids, and it's the last thing you want to see happen, but unfortunately it does. And had we been able to actually set that up previously and answered that first phone call or that first email,
Yeah,
I don't think
procrastination is such a destroyer of everything.
It is. People are, if you're uncertain, I guess that's what starts it. And
just
putting things off until the last minute.
We've got time for another a good news story or something that worked out a bit better.
I prefer the good news story.
Yeah.
So I've got it starts off tragically, which had a husband and wife, and the husband developed colon cancer. After the onset, 6 months later, he was no longer with us, and his partner had no real idea about finances, and he'd always run the finances in the family. And basically, with my advice and my help, we were able to, with insurance, basically keep her on a good financial footing. So these days, she's now retiring. She's able to see her grandkids. From a financial perspective, she's no worse off than she would have been. Yes, the actual situation was tragic, but at least she's able to live the life that she wants and the lifestyle that she wants to lead.
Well, it's better to go through tragedy with money than without money. That's for
Yeah,
sure.
well, that's right. You don't want to, have an extra tragedy on board, which
No, I
is
know
your
what you mean,
financial
yeah.
circumstances.
But that's
as well.
life,
Yeah.
Yeah.
We're not going to be here in 50 years. Oh, well, 100 years time.
Yeah, that's right. Yeah.
that's life, and you know, you're doing a great job out there, Stuart. That's why we got you on the show. We've heard some fantastic reports
Thanks for
about what
having
you
me.
do and how you do it. If you'd like to be in touch with Stuart, just go to our website. All his information will be there. We'll pass on all your information to Stuart. He'll be in touch with you, and he can make sure that you're fully updated and fully protected and covered with all the insurances that are right for you. How does that sound?
Yeah.
All right, stick around. After the break, we've got Steve Hudson, and the big question is, our finance guru, of course, and the big question is whether he's going to go to the whiteboard or not. We'll find out straight after the break. Thanks again, Stuart.
Not a problem, guys. Thanks for having me.
Welcome back. You're watching the Mortgage Busters show, and we are with Steve Hudson, our finance number one guru of all finances. Steve, welcome back.
Well, thanks guys for having us here. Thanks very much, Adrian, Greg. It's been a great week. Your week's been good?
As always.
Yeah, great.
As always.
Great couple of sessions there with Stuart about insurances. It's a very important thing for families and individuals to ensure that they've got the appropriate insurance for their family and themselves.
Exactly right. And you know what? This procrastination disease that we did talk about, that Stuart did mention, is rife.
Yeah,
Procrastination.
Steve? Get my words around that.
What did I hear you say? Procrastination.
Yes.
Putting off what you can do today,
Yeah.
you're putting it off to tomorrow or the next day or next year.
Yeah, I think you see people suffering from that, and they look back in their life and then see what they could have and didn't do, you know, if only.
There's those people that want things to happen. There's those people that make things happen. And then there's those people that say, what happened?
Yeah, exactly. So the first point...
And that's procrastinating.
Yeah, it is.
Procrastinating.
And that's where the thumbprint report comes in handy.
Love it.
Is that it allows everybody to actually, and this is the thumbprint report, so you know, it's the opportunity to actually map out your financial position where you currently are right now. And you know, I talk about it being investor ready, and one of the things is in being investor ready is having a plan, and this is the foundation of your plan for financial future to create
the springboard.
Wealth. It goes through a whole heap of stuff that's put together so you can actually see where you are in your life. Now, it may be a realisation that you've been procrastinating, and you know there's opportunities to change that through this plan.
And no
so
cost.
I suggest to everybody strongly, you know, to be investor ready or to pay off your mortgage earlier. You've got to have a plan, and this is the foundation of it. Go to the website and you know order one of these. It is a valuable asset, and it's free. It's free. Okay.
Which means no charge.
No charge.
You know, the way you did that, the way you held it and everything, you know, I reckon you could have been on sale of the century.
Well,
you know.
Well, we won't go there.
But you're absolutely right. It's a fantastic document. And it, you know, when it's produced, it is the springboard to greater living, to greater wealth, to getting those mortgages paid out, done and dusted, and creating some wealth for particularly retirement. Yeah. Procrastination. The train called someday leads to a town called nowhere.
Yep. Should be on a train to go.
Get on the go
train to Wealthy Town.
Wealthy Town, I love it. Wealthy Town. Get on the go train to Wealthy Town.
Okay, so this week, guys, I thought we'd have a very, very small whiteboard session.
Ah, the whiteboard. Here we go.
But
Always looking forward to the whiteboard.
I'm not going to disappoint you here,
Steve.
Greg, but
There we go. Whoa,
this
magic.
is just it. Okay. The theme for the discussion today: no whiteboard demonstrations, just the theme.
Wow.
Australians typically are a conservative bunch of people, although you could probably go into the out of the MCG and hear some of the best comedy written with the banter of the guys at a cricket match or a football match, and we're always prepared to be out there. But when it comes to making changes in our life, we're relatively conservative. We very rarely vote out first-term governments, although potentially when this goes to air, we could have a new government.
Yeah.
We don't look at our loans from year to year. And what I do with a consideration on this is that when I was in corporate world, we were a supplier to corporate industries, and they would have teams dedicated to bringing their costs down. And that comes back down to, they'd ask the supplier, can we have a reduction in price? And in some cases, the amounts of money were huge that we're asking for.
But did you have to go to the competition
Well,
if you had to?
Well, that's what they were. That's the threat. Is always
Yeah,
they'll go to the competition. And I'm going back 10 years now. I had one company ask for $280,000 as a cost down on one item, right? So
That's a lot of pens.
but it's a discipline that corporates have, and it's something that our clients or our viewers need to start copying.
You are
Ask.
right on,
Great-
dead on,
great
right.
idea.
Ask.
Yeah, it's
Yeah, so-
amazing what you get for when you ask for it.
Don't be bashful.
In a loan situation, rates go up over a period of time. When they come down, they don't generally come down the same amount, although there's pressure put on the banks or lenders to do that. But you'll find that the current rates for new rates that out in the marketplace is a lot less than your current rate that you're on. So we had a client that we went out and saw out at Millgrove, I think it was, and she knew we were coming out. She'd rang the bank and asked for not a better rate, but a different product that could deliver a better rate. And she'd already done that, and that was fantastic. So, there's probably a plethora
And they did it.
Yeah, a plethora of things that they can ask for.
Just ask.
Just ask.
So gas, electricity, insurances. Ask.
Yeah, car insurance is probably the typical one.
Yeah,
that-
I got to ask for mine soon.
it just goes on and on. And when do people change car insurance? When they probably get a new car, a new car every 3 or 4 years or whatever. But
It just keeps going up and up.
Yeah, health insurance. You just leave that and leave
Yeah,
it.
you just take it
and
for
leave
granted. Yeah.
But electricity, nobody ever asks.
Well,
now I
it's-
think people are starting to become more aware.
This-
Look, Australians have no qualm about going to a car yard and doing a deal on a car and negotiating a car down, but you can pretty much everything is negotiable. Not everything, but almost. There's a lot of stuff is negotiable. And like you said, everything you just need to ask, and you'd be amazed at what you can get sometimes.
We'll go elsewhere.
So what we'll do is put it on the website, a little spreadsheet.
Yeah.
It's not going to have 100 things to do. It's probably how many things you think would be on there, Adrian? 10, 15
15,
items.
I'd
Yeah.
say 15, yeah.
Yeah, what you're paying now, and then the tick is that you're to ask for a better rate either from another supplier or your current supplier. And as we touch base with you, either through Stuart, myself, or if you see Adrian or you see Greg, particularly if you're looking at the thumbprint report, we're going to ask the question. So we're going to drive it. It's just a mini challenge to you guys out there to see if you can actually save some on your utilities. Even ask the lawnmower man, is there a better rate? Or ask, another supplier. You may save $5 a fortnight. $5 a fortnight is how much, guys?
I don't know,
$125 a year.
Yeah, roughly.
That off your mortgage is that's a year. So
Yeah,
over a mortgage, that's over $3,000.
Yeah.
So you do stand a position to save a lot of money.
You just got to keep focusing on that mortgage to pay down that mortgage down to zero. So if you do save $125, get that $125 into your offset account on your mortgage.
That's right. Thumbprint report. So
We've got 30 seconds before we've got to end the show, Steve.
Okay,
So
beautiful.
In
But
summary,
don't pay more than
In
you
summary?
think. You should.
In summary, thumbprint report. Just ask and talk to us about paying off your mortgage.
Absolutely.
Get Stuart in to have a talk.
go straight to our website, and there'll be a form there. It's pretty obvious where you've got to go on our website, as long as tmbshow.
.com.au.
The tmbshow.com.au. Go there, fill in the required areas, and we'll be in touch with you and get you started on that go train to
Wealthy town.
Wealthy Town. Thanks for watching on behalf of Steve, Adrian, and myself. Thanks for watching the Mortgage Buster Show, and we'll see you next week.